Well, thank you so much. With that pronunciation of my name, it is clear that you are multilingual, and I think you have French in your background. First, let me just thank Professor Dr. Philip and the whole sponsors that have really done a fantastic job putting this CAC 2020 conference. I managed to listen in on several of the panels today, and they have really been fantastic. So I come to you, I'm in my small childhood village here in Switzerland, in the canton of the Valais, and I had a very intricate a plan to be standing up and with the mountain in the background, but at the last minute, my AirPlay would send audio and not videos. So I figured I would just sit down here at the dinner table. Being in Germany, I'm going to make a feeble attempt probably at dusting off a little bit of German. Also, meine Mutter wäre stolz zu wissen, dass zum Lernen, dass ich meine Deutsche benutzt. Sie hat mich als Kind zum Lernen gebracht. Mein erstes Praktikum war bei Deutsche Lufthansa Airline AG, aber es ist besser, wenn ich auf Englisch oder Französisch will weniger fehlen. So with that, I'm going to switch back to English to give you guys a little bit of remarks and the view of the world that I have of the payments. But thank you again for making the time today. By way of background, I'm the Director of Policy for the Libra Association. Prior to that, I spent a decade in the United States at the Federal Deposit Insurance Corporation. They are the United States regulatory body over 5,000 regional banks. So I have some familiarity with finance, both at the international and at the national level.
Julien,
Rob?
If I shortly may interrupt, if you have slides, we cannot see them. But
no, I apologize. No slides.
No worries. Thank you.
Okay, danke. Entschuldigung, like we would say. So over the past 3 days, it's very clear and it is encouraging that progress and innovation is being made, not only in the public side of the world, but also in the private side of the world. And it absolutely is encouraging because what we really see today is an evolution of the payment system. Not too long ago, you may recall, the German Ministry of Finance even called for a blockchain-based digital programmable euro. There's been a discussion from previous panel members, for example, in Sweden with the e-krona. Norway for years have been discussing CBDCs. Of course, China has piloted in several provinces its CBDC. So I don't think it's a matter of if, it is a really matter of when. Now, on the private side of things, you may have seen, for example, the announcement with PayPal that decided to enter the digital currency market by essentially announcing plans to its 340 plus million members that they were going to introduce the world of crypto to them. So I truly believe that we're entering a period of acceleration for the industry, as well as more public-private partnerships where I think most breakthroughs have been born from. One of the things that we must note over the course of this pandemic has really been that our ability to use cash and our ability to use and walk into a bank and use their services has somewhat been restricted. What I think this has given us thought of is that, there is a need for digital solutions to exist in this world. The example I will have, and you'll see I'll have plenty of anecdotes and historical references in my short discussion today, is that if telephony was still fixed today, we'd have not only billions of individuals that were unable to communicate with one another, but we wouldn't be able to have this phone call today, let alone be able to see one another or your loved ones for weeks and months. So an individual, Simon Sater, this morning said it best about individuals essentially saying that, well, money is digital today. And I will just read my notes. He said, we have a digital process to account for money, but not the digital money. And I think he's absolutely right. We don't have digital money. Deposits held in commercial banks, of course, they can be moved around electronically, like we have done using credit cards and check cards over the past 6-7 months. However, it is still the liability of the private banks who have to maintain the reserves and the deposits. So really, private innovation in money and payments is really as old as money itself. So the direction of travel is definitely digital. But I don't think it's at the detriment of current models. You'll hear me say more and more that I believe where we are today is creating optionality for the consumers. And so with the rise of digital currencies, and there are more than 1,600 today, I think optionality is where we're going. If we look back at history and we look back at large-scale changes, whether it was the telecom phase, whether it was the internet phase, if you look back at actual money, we transitioned mostly from cash to plastic, to checks, from checks to plastics. Move then to digital wallet providers today seems like the evolutionary step. In fact, a lot of businesses even today don't accept one form of payment or another. The most recent example I have of this week, I went to purchase a bed for my house here in Switzerland. And I went to a chain store here in Switzerland. And when I was about to pay, I asked the salesman, which was also the manager, what payments he would accept. And he said, well, I prefer cash. However, over 500 Swiss francs, you can use credit, but you can only use Visa. And so I asked him why I couldn't use another form of a credit card, for example, American Express. And he told me that his net fees after a customer uses American Express is 4.8%. And for a Visa transaction, it is 2.7%. And so I asked him, if we remove some of the friction from the payment system, would you be willing to give a discount to consumers if they came with a alternative form of secure digital payments? And he said, yes, I would definitely give 1 or 2% discount if he didn't have to pay the approximately 3% discount. So I thought that was fairly telling. So we've had a discussion over the past 3 days about the digital euro and stablecoins. So I just thought I would spend 2 minutes on CBDCs. As you're well aware, today 70% of the world central banks are exploring some of the merits and, of course, some of the risks that go into a digital currency. I think we really attribute this to the need to modernize the payment system, as well as remove some of the friction. And also some governments may be thinking, if it is not us that do it, then who else will be doing it? Clearly, the utility of having a CBDC would be wonderful. And as you're well aware, we have over 1.7 billion individuals today that are currently sitting on the fringes of the modern financial system. The United Nations, they have a sustainable goal, number 10, that asks to lower remittance cost from a stubbornly high 7% that has been around for more than 10 years to approximately 3%. And I don't think we can do that without a large-scale innovation. In fact, some corridors are much higher than 7%. They go 20, 30, 40%. And remittances, in my book, is the world's most important cash flows. They total about 650 billion euros. And to give you a perspective, that's about the GDP of the economy here of Switzerland. Just a couple of days ago, you may have seen the World Bank maintains data on remittances. And they said that between Q1 of 2019 and the Q3 of 2020, remittance costs have only gone down 0.02%. So we 0.2%. So we're at about 6.8% instead of 7%. So economists have also said that having digital currencies would be a benefit. The Bank of England said that if CBDCs were around, they would boost GDP by 3%. The Bank of International Settlements as well has said that it can improve market functioning. So I think very much like cash and like credit cards, there are some trade-offs with CBDCs. So now I'll switch my final kind of 8 minutes here a little bit to give you an update on Libra and the Libra project before I am sure I will get absolutely grilled by Philip in a few minutes. But I think it's worth reiterating one more number before I go into the project update. 1.7 billion people are without a bank account, and approximately 3 billion people total are either without a bank account or they are underbanked, which means that they use alternative financial services. However, 1 billion of these individuals have a smartphone. Therefore, there is an opportunity for us to leverage the smartphone to become an endpoint, a payment system for individuals. From the outset of the Libra project, our intent was always to complement and extend fiat currencies, not compete with them. Digital payment systems like the one that we are building today should be complementary to the current system, very similar to when checks came around and they were complementary to the system, as well as credit cards were complementary to the system. A project like the Libra project is being built and should be complementary to the system. Now, one of the things that I would absolutely be remiss not saying, to giving you a concrete example of why we are complementary to the payment system and not in competition, as may have been said a few times over the past 3 days that I heard of on this conference. So, one, you have to remember that our technology is open source. So what we're doing is not only are you able to build on the Libra blockchain, but we are continuing our work with a range of international stakeholders to, one, ensure a strong compliance framework for this type of system, but two, to listen to some of their concerns. You may recall the first white paper came out last year. We had an updated white paper that came out in April, and that was in no small measure based on all of the discussions that we've had with global stakeholders over the past 16 months now. Second, for Libra project to be successful, we really need a diverse set of members and participants in the ecosystem, from designated dealers, large financial institutions, to innovators. Many of you that are sitting there today can build on the Libra blockchain. And the third is our posture has always been that we are asking for permission and not forgiveness. So we're pursuing a regulated pathway to ensure alignment with some of the global stakeholders. So we put in practice what we've learned. You may have seen the updates to the white paper that included essentially the ability to offer single currency stablecoin in addition to the multi-currency Libra coin on the network, ensuring that we enhanced some of the compliance aspect of the payment system with a very robust compliance framework, ensuring that we didn't go to a permissionless state, although that was a 5-year down the line kind of things. We heard from stakeholders that having a postal address in Geneva was something that was beneficial, and not moving to permissionless. And last, just building strong protections into the Libra reserve. So where do we stand today? We're continuing our work with FINMA to become a regulated payment system. We are moving to a more operational phase of the project, as well as flushing out the governance structure of the project. So I think important key takeaways here, one, have been around the optionality of digital currencies, not competing with the current system, but really trying to complete the system. And although a digital transformation is more difficult for public entities than it may be for private entities, I think currently public-private partnerships make a lot of sense in this particular world. So I think with just the last 2 minutes that I have before we move on to the fireside chat with Philip, I just wanted to say that digital currencies are here to stay. Even if we are a few years away from CBDCs being in worldwide adoption, it is very clear that in today's market, you already have many digital currencies that are being used. Only approximately 10 to 15% are so-called stable coins. However, again, it is a matter of when this will happen, not if this will happen. So with that, I will pause for us to transition over to the fireside chat with Philip.